Wall Street's favorite arch rivalry is again the main event. Morgan Stanley boss Ted Pick unveiled a 56% jump in deal-related revenue in the third quarter, propelling the megabank shares to a record high. It narrows this year's gap with nemesis Goldman Sachs, which in turn is redoubling efforts in wealth management. The storied battle will only intensify. Morgan Stanley generated more than $15 billion in revenue for the 3 months ending in September, a 16% increase from the same period a year earlier. Its advisors also outpaced the 20% uptick at their crosstown counterparts. Though Goldman's stock performance leads the street year to date, pull the lens back further to 2018 when David Solomon took the firm's top job, and Morgan Stanley is now ahead. A lot of this is just catching up. Goldman leads the industry in dispensing M&A counsel, and its investment bankers have outperformed Morgan Stanley's for years. Its advisory and underwriting business is expected to deliver 30% more revenue than its rivals in 2024, though that's the narrowest gap between the two in 6 years. The Battle Royale is being revitalized by Goldman's retreat from attempting to break into Main Street. Instead, Solomon touts the One Goldman strategy of bankers working closely to generate extra revenue. Morgan Stanley similarly emphasizes the integrated firm. Both are seeking more steady income to smooth out market gyrations, much of it in wealth and asset management. Here, Morgan Stanley is ahead, having bought online brokerage E-Trade and investment shop Eaton Vance as it climbed to $6 trillion in client assets. The wealth management division's return on equity, adjusting for intangibles such as goodwill from acquisitions, is an eye-popping 37% this year. Goldman, unsurprisingly, wants a piece, but is taking a different approach, targeting much wealthier clients with an average account of about $70 million. Ultimately, the idea is to reshape how investors value banks, much the same way they have investment giants like Blackstone. The buyout firm now commands a multiple of nearly 28 times forecast earnings for the next 12 months. Morgan Stanley trades at 14 times, Goldman at 12. Although Goldman has hit a 24% pre-tax profitability target in wealth and asset management, there is more work to be done. Just look at the pair's stock prices relative to book value. Morgan Stanley fetches a premium. The heavyweight fight to close that gap will be a hot ticket.